Okay, so welcome back. It's the 8th of October. Looking into what went down for the New York session. In front of you having the mini nasdaq futures, the December contract, and this is the pre-market session from 7 going into 9:30. So with this thing of trading, there is something that we call consistency, and you have to be consistent. So it's you having the ability to do what you do at a regular basis, and you see me coming back doing the same thing day in day out, telling you how the pre-market session, the December contract. I'm trying to build something. I'm trying to build to make an edge for my trading, in that I am used to the same thing going into execution. And if I'm to tell you about why I'm doing this, you're not seeing me executing or taking any trades or something of that sort. It's because I traded before going into there, so I accepted that I'm having a red year this year, because I had a plan of ending my trading by the 6th month of this year, where I was to be eligible for payouts and to be taken to the Top Step Live account. But I failed on all of that going into January, and I lost a large sum of money. So this is me realizing that this is my future, and if I want it to work out, I need to put in the work. So this is me building discipline, building an edge to come back in the market when I'm competent to say that I'm a profitable trader. So let's come back. We have the 7 a.m. opening up right there. We open up, we take out minor buy side, as you can see, this high and this high. So this is minor buy side being taken out. And look into the price action that was presented to you before 7 a.m. We have the market dropping lower, taking out sell side liquidity. So we first took out sell side liquidity, then we came back for minor buy side liquidity. So in this state, I'm looking for the low that took out the sell side liquidity as my first draw on liquidity. So as you can see, I have this as minor sell side for the session that is opening up. So I have this as minor sell side. This is Caleb's model on the 2024 mentorship. Minor sell side liquidity. So minor sell side liquidity. In this, what am I looking at? I'm looking at sell side being taken out, then attacking buy side, and me getting a fair value gap that will pose as my entry for the session. And on top of that, I'm having the 12 a.m. to 12:30 opening range denoted, and we go above it before the pre-session. So we have a move that would have been my breaker, so measuring from this high to that low, getting my optimal trade entry, that high to that low, marking in my optimal trade entry right there. And as you can see, don't mind me, I'm having some sort of flow. We rally, we drop lower after this high is printed. We come back into the optimal trade entry levels, and after that we just drop. So if you didn't use the fib, I'm having a fair value gap that led to the taking out of this high. When this is invest, you have the most reliable fair value gap, as I think I said in some of my previous videos. And in an inversion fair value gap, you need the market to stay, if it is to send the market lower, you need the market to stay below the corresponding crossment of that. So you need it to stay in the lower half of that fair value gap it is inversed. So as you can see here, we have the market dropping, we come back into that fair value gap, the bodies respect the lower half, and then we drop. So this would be your sell entry right there. So this thing, your stop loss at that, targeting minor sell side, and minor sell side is attacked before we have a big retracement into the 12 a.m. to 12:30 opening range. Then going into 8 a.m., if I can measure from this candle's high to that candle's low, give you the extrapolated high and low, this is your target, the negative 0.5. If I'm to use that like that, taking this off just there. So going into 8, I know I'm still having the market having room to go to the negative 0.5. So if I'm to measure from the high to this target and make quadrants of the range that I expect the market to move, I'll have something of this sort. Just like that. So coming into 8 a.m., we have the market trading into the upper quadrant of the expected range. Let me put that right there. Have the market coming into the upper quadrant. We drop lower coming into 8 a.m. Note that. And the upper quadrant of that aligns with the half of the opening range at 12 a.m. So 8 a.m. opens up, we drop coming out of the opening range. So we drop, have a volume imbalance. I'm looking at the week with the move that has a breaker. So I'm looking at this as my entry. So the market drops at 8, we surpass that week, we close below. The next candle comes back into that to give you an entry. I'm having a fair value gap right there, but this fair value gap has a portion of it that was filled. So the unfilled portion is this, and I'm marking that from that volume imbalance to that. I'm not marking the whole fair value gap, I'm marking only that. So I have an inversion fair value gap right there. Going into 8 to attack the negative 0.25 level. So we drop lower, close below half of the expected range. We come back into that, it has a fair value gap. So this is a bearish fair value gap right there. This is your bearish fair value gap. That is your bearish fair value gap, and as you can see, the market stays in the lower half of this fair value gap. When you're in a downtrend, you expect the market to respect the lower portions of the PDRS. So have the market coming back into that, tapping the half of the range, and then we drop. Now, if you remember, you are denoting this range to a target that hasn't been hit. This is the market. I'm showing you what the market printed, but you are drawing this fib level on things that haven't been printed out. So this portion of price action you wouldn't have that. So take this as a tape reading. Now, if you have this fib level on something that hasn't been printed and you see the market respecting that, you know you're on the right side. So I'm so confident to add another trade at the 0.5 mark and adjusting my stop loss to this fair value gap high. we continue dropping lower. How far below this low can the market go? There's 0.5. So we drop. You have the market printing in highs, but no high is making a higher high. So this confirms that we are going to have speed. We drop into the negative 0.25. And what happens after that? To show you that this was the primary goal of this session, after that, the market happens to reverse. And this is speed in, if I'm to mark for you the macro for this session, I'm having from 750 going into 810. So this time window, as you can see, let me make it a little bit bold. This time window to this candle, as you can see, if I have to put that off, this is the macro from 750 to 810. Now from 750 to 810, you have the market running, and this gives you an expansion macro. After those minutes, we have speed, have the market delivering with speed to reach its target. And after the target is reached, we accumulate, going back into the 12 AM to 12:30 opening range, going into the 9:30. So 9:30 opens up. We took out the primary goal for this session. So if I still had this denoted, the negative 0.25, and the market hadn't reached it yet, I would still have some doubt in us going higher. But all the desired move was printed already, so I'm not expecting the market to drop back lower into these lows. I'm expecting this low to keep protected, and as you can see, this is a week of the market dropping into that, and it supports as a move going higher. So everything you had before was being inversed. So I have this as my inversion fair value gap. So 9:30 opens up with us having a move dropping lower, and as you can see, we first took out minor buy side. So in a consolidation, you need to look at these things. What side of the market did we take out first? So we took out buy side first, then the market dropped for sell side. Many would have looked for a continuation right here, but this candle's closure nullifies that. We come with volume and close above the 12 AM 12:30 opening range, consequent encroachment. So after this closure, I'm looking for buys. I'm looking for this to get closed above, giving me a bullish order block, and having my stop loss moved to break even at that point, because 9:30 has a lot of volume and anything can happen in the 9:30. So pulling your eyes into this range that we moved, remember we expect the market to drop. So below this 0.5, this is our discount, and then above that, this is our premium. So I'm expecting, if we are to rally higher, I'm expecting the market to take out the premium of this market and of this range and go above that. If we are to go lower, the low of that. Now we happen to close above the half of the 12 AM to 12:30 opening range, and also above the 0.75. So I'm expecting this level to fail. So if this would be your entry, we close above, come back into that as a confirmation. So my stops would be just at that. Note how the fair value gap here was inversed and played as an inversion fair value gap, so clean. You can see there. Now that would be your entry. Going into what? We have this blue line right there, noted as buy side liquidity. Remember, for the New York launch macro, the launch macro runs for liquidity levels, internal and external range. We have the fair value gaps the 11:30 to 1:30 large macro runs for the inefficiencies or previous highs that were formed after 10. So every high that was formed after 10, I'm looking at that as buy side liquidity. And if you are to look into this, we had the market not reaching any of those objectives. So I have a premium high right there, and I'm having these two highs right there. So the market did not come for any of those objectives. Now I'm looking at them in this current session because there are orders that were unfilled. These are the two highs. This is the premium high that I talked about. So I'm looking at those as my levels of liquidity. And as you can see, we have a perfect delivery into that. So leaving that aside, if you didn't take this entry of the 12 and 12:30 opening range, because I bet no one had it on the chart today, if you didn't take that entry, we'll have the first presentation fair value gap. I'm not marking this because we have the 9:30 candle in the formation of that fair value gap. So I'm looking at the 9:31, 9:32, and the 9:33 forming a fair value gap as my first presentation. We drop into that. Bodies go in the lower quadrant but respect the lower quadrant of that. We rally higher, giving us a break of structure and a bullish order block. So this is a bullish order block. So in a classic buy model, or if we are in a buy program, also candles will be order blocks, but you have to look in for which one is the strongest. So for me to take a break, an order block, or to take a bearish candle as an order block in an uptrend, I need that black candle to have retested into a PDRA. So I'm having these two black candles coming back into the first presentation. So I expect these to work as an order block holding price. So we drop into that, we rally higher, forming a fair value and another bullish order block because the candle retested into the first presentation. So as you can see, we have this, we drop lower, the bodies go below mean threshold of that. That's not a problem. We come back close above it again, then we drop into that, respecting it as how it had to be. So this is a manipulation. These black candles, the extra black candles that went below into that, into this order blocks range that retrace deeper, this is all manipulation to scare you from taking this bullish, this buy trade. And we have the market correcting that at that candle. We'll drop into that, continue higher, close above that. We have a fair value gap and an order block. So this is the unicorn model. Now this is unicorn model. I'm having a bullish fair value gap plus an order block right there. So just like that, we drop into that. What is respect the half of that clean, we rally higher, forming an order block. We drop into that again, rallying higher, going into the 10 AM macro. So going into the 10 AM macro, we have a fair value gap right there. We drop into that, so the 10 AM opens up and we just push. These quadrants you're seeing on this chart, this is a daily wick, previous daily wick. Remember, we are at all-time highs. So at all-time highs, you would want to have the approximate wicks at which the market is going to refer to denoted on your chart with the quadrants. So you have at 10 AM the market rallies entering that, and we have a body closure. So the next candle drops lower. This is the 10 AM candles wick. If I'm to put this off, that line denotes the 10 AM. So this is the 10 AM candle. We have this candles wick. We come back into the low of that daily wick. We rally higher into the lower quadrant. We fail, and then this candle closes above it. So I'm looking at this wick as an as a PDRA. So we drop into that, remain in the upper quadrant. We rally higher into half, taking out this liquidity. as you can see. So measuring from where the move that took out this high started, if I'm to measure like this to that, have extrapolated low and high for my take profit. Just like that. We have the market rallying into consequent encroachment of that week. We drop back into the low, coming into 10:30. I'm to mark 10:30 for you right there. 10:30 opens up, we are above that, we drop, taking out this low, coming back into that fair value gap. So this fair value gap holds, giving us a rally back into the negative 0.25. So I'm still confident, and I'm not closing my trade because we did not hit the negative 0.25. Not to be cocky, not to be what, but this has to be hit all the time. We go into that, going into the 11:30. So before 11:30, that goal is hit. And what else would you want from the market? So isn't this beautiful? If I to take a screenshot of this, just like that. I think that's it for today. Thank you guys for watching. This was a tricky session, but if you had to tow with it like that, then it would have been a very great session because the market moved a big range, almost like yesterday. And just because I'm not having executions doesn't mean that I just don't know what I'm doing, because I have to reassess the situation. I lost a lot of money in the market, and I have to get ready for the biggest comeback of the century, I think. But anyways, thank you. Like and subscribe.